normal. You can't chase like reversal strategies because you want to follow the direction of the market to minimize your risk. What up YouTube, it's your boy Dexter XFX, the Prince of Forex, Dexter Vigilant. I'm here with my nigga here, Ivy Mark,
and welcome to the Traders Corner.
First ever episode on the Traders Corner, guys, give it up. Make sure you stay tuned in for more episodes. We have all things Forex, daily insights, market analysis, daily tips, so stay tuned.
Yeah. Be sure to hit that subscribe button, notifications on. Feel free to comment down, ask questions. We'll be here to answer everything. We've got a few questions lined up about
trading strategies.
Yeah, we're just gonna be answering a few questions on trading strategies, what to look for, what to avoid, and what to do, man. So let's get into it.
So question number 1. Are trend following strategies better than reversal strategies?
For me personally, I feel like continuation strategies are more sufficient for people that are still growing their accounts, you see. Because you have a confirmation that the market is still going up or it's still continuing.
It's easier to follow the flow of the market and the direction.
It's easier to catch the flow, not go against the flow.
Yeah.
So that's my opinion on that.
Because you want to follow the direction of the market to minimize your risk going on the trade,
Yeah.
Question number 2. What makes a trading strategy reliable?
Having a solid plan, knowing
trading plan, strategy, an edge
to your strategy. Know what you're doing. Don't this thing of changing strategies quite frequently.
Exactly. Eliminate the gambler mindset.
Yeah, so changing strategies is good for a beginner, to see what suits you see.
Try different stuff, different styles.
Once you see that, okay, I found this strategy and I'm comfortable with it, you have to forget
and stay consistent with one.
Stay consistent on one strategy until you master that strategy.
Makes sense. During the first phases of learning, it's a learning curve. So at some point you're gonna have to try different styles and different methods. But then in the long run, you're gonna wanna stick to one thing and master that. Question number 4. Can simple strategies outperform complex ones?
Definitely.
It takes us back to the SMC and price action debate. Which one is better? I feel like for me, like we said before, it's always better to cover bases before sticking to one. So I think if you're starting out, it's best to stick to pure price action techniques before diving into the more complex ones like ICT and SMC.
Knowing your basics,
CRT,
your concepts.
Master the basics first before climbing the ladder. Basically.
For liquidity, basic stuff,
Yeah.
So simple beats complex.
Exactly. Question number 5. What role does market structure play in trading?
Trading is basically you being able to analyze the market. So that says a lot.
Especially because we know that the market always repeats patterns. So once you study those patterns and how they reoccur, you can come up with a strategy that works in predicting the next movements of the market. So market structure comes down to our higher highs, higher lows, uptrends, downtrends, continuations, breaks, retests. That's our market structure. And you can't know market structure if you don't know how to read your candlesticks. Candlesticks are important. They are the language of the market. You can't go to China without knowing China. You gotta know the language so you can get familiar with the environment and help your edge in a way. Next question. Are indicators necessary for profitable trading? This one is a popular one. No.
Being able to read pure price action is the way. You should be able to analyze the chart without any indicator.
And there's a bit of a propaganda on the social media. You see traders with flashy indicators, the charts are all colorful, too many lines and stuff. You don't need that. You just need a simple strategy. that works in your edge, not another influencer's edge, not your mentor's edge, your edge. Basically, today your strategy is working, next week it's not. Like, where do they do that?
It's not like the strategy isn't working. The strategy is working, but it's how you like go about the strategy. Like, today you could be following the rule, and tomorrow you could be just like not following your rule. Cause it's like you adapt, you see.
Yeah.
It's like, okay, I did this, but now you get used to it, you see. You don't put in the effort as much as you did when you were like still starting, you see.
Yeah. And also remember, just like everything, the market has a season. It's seasonal. Your strategy won't work all the time. Markets have different conditions. Currencies have different conditions as compared to metals and oils and daylight. We have daylight savings. We always have news events, geopolitical events too. They affect how the markets move. So you can't always win on every trade. So you can't always have a winning week.
You have to be aware about like what's going on around you.
Yeah, you can have like a long losing streak, but then after that a nice winning streak too. So it's seasonal. Is backtesting essential before using a strategy?
Yes.
First, elaborate on the concept backtesting. What does it mean?
When you backtest, it's like you going back into the history of the market, like seeing patterns that were formed and stuff like that. You see, like you see like how the market was moving, seeing if your strategy is like in line with
kind of like doing corrections.
Yeah, corrections. You just like reviewing your trades.
In your data, you can't have data if you don't have trades.
Yeah,
can't have trade if you don't have confidence. Which is a topic for another day, trading psychology. Last question, what characteristics define a high quality setup? This is A probability versus B probability. What would determine a quality setup?
It all goes back to market structure, man. You should know your basics, the breakup structures, being able to identify liquidity, and just knowing your discount and premium areas, you see. It's just like knowing your basics can
give you an edge against the market. So you gotta define your entry, you gotta define your exit point, you gotta define your break-even point, your risk to reward ratio, a trading checklist. Before you take a trade, you have to take a checklist. You know, all the things you have to do, the state you have to be in. And that wraps it up for the 10 questions of trading strategies. Let us know in the comments what you'd like to see next. Trading tips, daily analysis, market insight, or weekly overview, or a typical day in the life. You let us know. Stay tuned.
Out.
Peace.